In this episode of the Seatrade Maritime Podcast, we'll be talking to Will Fray from Maritime Strategies International about the outlook for the dry bulk shipping market in 2026. Will, welcome back to the podcast.
Hi Marcus, nice to speak to you again.
Great, thanks for taking the time to talk to us today. And could you first just sort of give us a look back at the dry bulk market in 2025?
Yeah, I think the resilience is another theme for dry bulk. Resilience to various disruptive factors, tariffs, USTR, etc. But on the fundamental basis, resilience to the fact that the fleet grew by 3% over the year, yet demand actually expanded only by 0.5%, demand in terms of the tons traded. So it's quite remarkable that dry bulk earnings only fell by around 10% year on year. So they were lower. So this sort of disparity between trade growth and higher supply growth certainly had an impact on suppressing rates. But certainly towards the end of the year, rates were much stronger than those sort of fundamental trends might have suggested. It's been another year where the changes to trading patterns have supported the market. One way to look at this is obviously look at the effect of distances and speeds. And if we combine those together for average voyage times, they increased by 4% in the Capesize sector, slightly less in the sub-Capesize sectors. And that was due to a rebalancing of trade routes where particularly weak coal trade around the Pacific was then offset by higher trade coming out of the Atlantic into the Pacific. One key point being bauxite markets, where Guinean bauxite shipments into China, Guinean bauxite exports expanded by over 20% year on year, and that was a huge factor in supporting that increase in distances. And aligned to that was the higher port waiting times to load bauxite. So this kind of redistribution of trade then helped support the freight market to levels that were much higher than the underlying trade and fleet growth would have suggested. So where we stand now is that the market started the year on a better footing than last year. So I think that there's a little bit more positivity sewn into people's expectations.
Okay, so you see that as a more positive start to the year. Do you see a sort of seasonal downturn that we tend to see in the approach to Chinese New Year, or how do you see it going?
Yeah, I think that is what we would expect this year. There's no particular drivers that would derail that seasonality, and we are expecting earnings to soften. We are already seeing particularly sub-Capesize benchmarks starting to come off their recent peaks. And I think the one segment of the fleet we are most, let's say, cautious about in the near term is the Panamax market. Not only is coal trade continuing to fall, there is a very significant amount of Panamax tonnage being delivered this year, and often you see a Q1 spike in deliveries, as we'll see probably this month. So to put that into context, we look at Panamax vessels between 70 and 120,000 deadweight. Over the past 5 or 6 years, delivery's been around 10 million deadweight, but in 2026, there's expected to be 15, 16 million deadweight delivered. So it's quite a big uptick this year. And interestingly, if you look at the ratio between Capesize spot earnings and Panamax spot earnings, that Cape-Panamax ratio, that's now firmly over 2. So when this happens, when that ratio expands widely, then you'll see stems splitting, you'll see shipments being moved into Panamax vessels. And that actually was a theme that was happening through 2025 as well already, because of this weaker coal trade, was that differential widened, and we did see the remaining coal trade being taken more by Panamax ships, a higher share in Panamax ships, whereas Capesizes were moving more into iron ore and bauxite trade. So if this Panamax segment comes under pressure, then we expect that to happen certainly during Q1. And meanwhile, there will be disruptions to iron ore exports, which that will see Capesize markets decline as well.
So it's going to depend a bit by ship sector. I mean, if you look further out to the remainder of the year, what do you sort of see as the demand drivers for dry bulk shipping?
Yeah, I think we're slightly more positive than we have been. The main theme that is on people's minds in the dry bulk sector is how much the impact of Simandou will have on the market. This 120 million ton capacity iron ore mining coming out of West Africa And our expectations are it's going to take some time for this to ramp up. So it's not really going to have a hugely positive impact on the market this year. We'll start to have an impact later in the year. But the difficulty with this is actually it's not only West Africa, but also Brazil's bringing out new capacity this year as well. So there's a lot of new iron ore capacity coming to the market. So the question then is where that's going to go, because China's property markets remain weak. We don't yet see signals of any kind of stimulus just yet on infrastructure growth. So we think that Chinese steel production will remain under pressure this year. So then to absorb this new iron ore export capacity, then we'd need to see either a step change in China's stockpiling efforts or a sharp reduction in domestic output. And so we're actually now slightly, we think that Chinese domestic production will be cut, and actually will be cut by around 30% over the next 3 years. So a gradual reduction in China's iron ore production. That'll make room for these imports. But overall, there's not going to be huge growth this year. So we have iron ore trade rising by 1.5% in 2026. So it's not going to be a massive driver. Meanwhile, coal trade is still under pressure and will likely fall. Bauxite is an interesting one in that last year had such huge growth that China is now importing more bauxite than it can consume based on the cap to aluminium production in China, and that cap remains in place. Then it's very difficult to see them importing a lot more bauxite unless they again build strategic stockpiles in bauxite, and those stockpiles are rising at the moment. They're still below historical maximum, so there's still potential maybe for more bauxite to be traded, but not to the same extent incrementally as there was last year. So that's not going to be a big incremental driver for trade growth this year. We're slightly more positive on grains out of Brazil, and now there is some agreement between the US and China to see some grains moving along that route. Meanwhile, there will be continued support from minor bulks, from fertilizers, from steels around Asia, out of China, exporting excess production, and other construction materials into Southeast Asia. So we think that overall trade growth will be stronger this year than it was last year. So over 1% this year versus 5% last year. So it is certainly better, but that's still not hugely positive given the growth rates.
Okay, so not a hugely positive picture, but not too bad. What about the supply side? Overall, I think dry bulk has seen relatively little new build ordering compared to most other sectors.
Yeah. I think I've mentioned Panamax supply dynamics being a threat to the market this year, and we have the highest year for deliveries, around 40 million deadweight tons expected since 2020. So in terms of near-term supply threats, then we do think that overall that there will be a sort of more supply pressure on the market this year, much as we saw in 2025. We saw a 10% downturn in freight markets overall for the year. We expect further declines in 2026. Beyond that, the order book is still quite low, and it's difficult to see a large amount of ordering if freight markets should then decline this year. We've got very high newbuild prices. We are expecting newbuild prices to come off a bit. Adam will talk about that later. And when that starts to happen, then perhaps that would leave owners still pulling back from ordering for a while yet. And as Dan mentioned, for container ships, then the uncertainty related to the IMO net zero framework, meaning that perhaps ordering still gets delayed for many owners. So we are expecting ordering to be quite weak in 2026. So that overall will help the market in 2-3 years' time. So when Simandou ramps up, when deliveries start to really fall, then we are maybe more positive for the outlook beyond 26, 27. But until that time, we'd say that we're expecting freight markets to continue to decline from the recent peaks.
Okay, so hardly a banner sort of year for dry bulk, but looking a bit better going further out. Thank you, Will. Thank you for listening to the Seatrade Maritime Podcast, and we look forward to joining you on our next episode.